Welcome to today's episode of Heard and Seen Around. I am Rajesh Karipurath. This is my take on macroeconomic and geoeconomic data points, which I find interesting. I hope you enjoy watching it as much as I enjoyed curating it. Cheers.
Social media is where everyone is authentic in exactly the same way. The algorithm knows me better than I know myself. It also thinks I need new shoes daily. We measure self-worth in likes now. Inflation has hit that too. Meditation apps send reminders to relax. Nothing says calm like a push notification. Free shipping is the most persuasive philosopher of our time.
The global equity pie is $120 to $130 trillion, and the US alone takes nearly 60% of it. At $16.5 trillion, America isn't just leading, it's lapping the field. And the top 10 stocks, nearly 40% of the S&P 500. That's concentration with a capital C. China and Japan are sprinting, both up over 20% on AI optimism and foreign inflows. Meanwhile, India, still a top 5 heavyweight, is down 5%, dragged down by IT. The message, leadership is narrow, momentum is rotating, and size still matters. There's roughly 6.3 billion tons of copper on Earth. Sounds massive. We have mined 700 million tons, discovered another 2.1 billion tons, and an estimated 3.5 billion tons is still hiding underground. But here's the catch. Demand is nearly around 25 million tons a year and accelerating, thanks to EVs, grids, renewables, and data centers. So the problem is not geology, it's grades falling, permits dragging, Capex discipline, and smelter bottlenecks. Copper is not rare. Fast new supply is. India's direct tax collections are up 9.4% year-on-year, touching rupees 19.43 lakh crores by February 10, 2026. Already about 80% of the full year target. Corporate tax is doing the heavy lifting, growing well into double digits, while income tax growth is steady but softer. Refunds have declined, which also boosts net collections. The signal, the formalization is intact, profits haven't collapsed, and the fiscal map isn't wobbling, at least not yet. Revenue momentum may not be spectacular, but it's solid. And in budget season, solid pays the bills. After years of waiting for private Capex to show up, it finally has. Corporate India's fixed asset creation is up 13%, a 6-year high. That's not accounting noise, it's cement, steel, power, infra, real economy stuff. Asset growth is accelerating, utilization is firming, and bank credit is flowing again. Translation, the investment cycle isn't just government-led anymore. The private sector is stepping back into the ring. If this sustains, it changes earnings, credit growth, and the medium-term GDP story. India's CPI is getting a makeover, and the political economy just shifted a notch. Under the new base year, Bihar and Tamil Nadu gain the most weight in the inflation basket. Maharashtra and West Bengal lose ground. That means price trends in faster-growing, consumption-heavy states will now move the national needle more. This isn't cosmetic. CPI weights shape monetary policy. A different basket can subtly change the inflation pulse the RBI reacts to. Inflation hasn't changed. The lens measuring it just has. After a monster run, the Magnificent 7 hit a record $22.3 trillion in late October 2025. Since then, less rocket, more runway. Market cap has cooled to around $21.2 trillion, basically flat for months. Not a crash, a plateau. The AI trade hasn't died, it's digesting gains. When a handful of stocks carry the entire index, even sideways action feels dramatic. Concentration cuts both ways. This isn't euphoria anymore, it's consolidation.